Yo, Gem fam, what's going on? Welcome back to the channel, Dropping Gems FX. You already know, my main goal is to lace you guys up with advice and tips on how to take your Forex trading journey to the next level and to take you along my journey. Okay, now in this video, we're going to be talking about risk to reward ratio. Okay, in the last video, we talked about risk management. This video, we're going to be talking about risk to reward ratio. Those two topics combined are going to make you a profitable trader, a consistently profitable trader, okay? And I'm going to show you how. Obviously, we're going to dive into the charts. We're going to go to TradingView. I'm going to illustrate everything I need to for you guys to understand and digest this topic. Now, before we start the video, I just want to say, for those who are going to go in the comments section and try to roast me for getting all dressed up for a video, no, I did not put on this shirt just for this video. I'm actually going out after. I had a long day at work. I had to change because I'm going to a birthday event. You already know the vibes. You know the vibes. But yeah, mind your business.
Mind your damn motherfucking business, bitch. Little stupid bitch. Little dumb teaching bitch. 2 + 2 not knowing what the fuck it is, bitch. Cross-eyed crying down your back, fat foot ass bitch. Long titty, no nipple having ass bitch.
Okay. Don't be worried about what I'm wearing. Worry about the gems, okay? So we're going to get right into the video. Without further ado, let's get it. Alright, gang, like I said before, we're on TradingView. Beautiful platform, amazing platform. I'm going to use the tools in this platform to illustrate exactly what risk to reward ratio is. Obviously, we are on GBP USD. We're on that pair. If you don't know what a pair is, go back and watch, I think, episode 3 of my training series. But if you do, stick with us, baby, because we're moving straight into the gems, right? Today, we're going to be talking about risk to reward ratio, like I said, aka P&L, and that just stands for profit and loss, right? So, I'm going to give you my definition of what risk to reward ratio means to me, and this is solely my perspective. I am not Webster's Dictionary. I'm not a thesaurus. I'm not a professor. I'm not anything like that. So take it for what it is. It's just my point of view. You know what I'm saying? So, like I always say, don't try to sue me. But, you know what I mean? Risk to reward ratio, in my words, is the ratio that determines how much you're willing to risk in comparison to your target level of profit, right? Basically, how much money are you willing to lose in order to get the amount of money that you want, right? So that's what it's going to boil down to, right? And the 3 topics that kind of build up to risk to reward ratio is going to be your lot size, right? First of all, these 3 terminologies, 2 out of the 3 have been explained in previous videos. Again, if you don't know what these mean, go ahead and go back to the risk management video, to the video before that, because I'm going to breeze through this. We're going to focus on take profit for today. We're going to focus on that, okay? So lot size, we already know what that is. It's the amount of money that you earn per pip on any given trade, right? We know how much your lot size should be in comparison to in relation to your account, because they do correlate, and you do need to watch that in order to minimize risk. Again, stop loss. We know how big or small that should be in relation against your lot size in relation to your account size, okay? We figured that out in the last video, so we're coochie crunchy on that. Take profit. This might be the foreign term for you. Take profit is exactly what it sounds like, right? And your stop loss, that's the amount of money you're willing to risk in a
Let's take this overboard now. I want you to.
market takes you out of the trade, right? So you only lose what you set, right? A specific amount that you set. Again, in that aspect, but flipped around, take profit is a given amount of profit that you set in any given trade in order for the market to take you out with profits, right? If you say I only want to get my take profit level is 50 pips, you know what I'm saying? 100 pips, 20 pips, 30 pips, whatever the case may be. After that, you're out of the market, right? I hope I didn't go too fast on this for you guys, but you guys should already know 2 out of the 3. You know what I'm saying? And take profit is not hard to comprehend, in my opinion. But we gonna see. We gonna see in the comments if I went too fast, right? Just let me know. Just let me know for future videos. All right. So now you already know I like to give examples after I give the definition and all of that stuff. So let's break it down to the second level. You feel me? Let's give a hypothetical situation, right? This is gonna make you understand the power of risk to reward ratio. Very, very powerful tool, right? So hypothetically speaking, we have $1,000 account. We know based off of this account size what our lot size should be for every single trade. It's going to be 10 cents. It's a micro lot. A stop loss is going to be 20 pips. That's risking 2% per trade. Amazing, amazing risk management, right? You can go a little bit more because you have a $1,000 account size, so you can go up to maybe like 30, 40 pips. That's risking 4% at the max. At the max. But yeah, okay. So let's take this line by line. First line, right? Micro lot, 20 pip stop, 20 pip take profit. The risk to reward ratio right there. Did you guess it? Did you guess it right? It's 1 to 1. In dollar amounts, right? For that trade, for that lot size, you're risking $20 to make $20. Look at me. Look at me for a second. Look at me in my eyes. Hear my voice. Hear my eyes. Look at my voice.
Yeah, look at me.
Look at his face.
Look at my face.
Look at his face and listen to me.
Look at him and listen to me.
Look at him and understand me. Look at both of us but understand no one. Listen to my words and hear his face.
Do you think it is funny to throw an egg in somebody's
You think
face?
it's funny? You think it's a joke? I'll shove a full egg inside your asshole and watch it hatch.
Does that make sense? Does that make any sense? Does that make any sense at all? This is a thumbnail right now. Does that make any sense? Why would you risk $20 to only make $20? Like, if that makes sense to you in your head, you're not living on Earth. You're in Mars or somewhere. Because you're just not here. You're just not here with me. You need to go. Okay? Never ever take a trade that's 1 to 1. It doesn't make sense. It's not even beneficial at the least, right? Why? Okay? It's not feasible. All right? Moving on to the next line. We're gonna look for the sweet spot, right? The sweet ratio. Okay? Moving on to the next line. Same lot, same stop loss, 40 pip take profit. 20 pips more than the last line. Okay? That's a 1 to 2 risk to reward ratio. In dollar amount, you're risking $20, to make $40. That's a little bit better, but it's not the sweet spot. We don't really want it. We don't want that. Right? Next line. Same scenario in terms of lot size, same stop loss, 60 pip take profit. Now we're at a 1 to 3 risk to reward ratio. Pretty nice. I like that. Like, my preferences, I wouldn't take any trade, even if it was a guarantee. I mean, obviously, if it was a guarantee, I would probably take it. But if there was a chance that I was wrong, I would never take a trade that's less than 1 to 3 risk to reward ratio. It's not in my trading plan. Doesn't make sense to me. If I deviate from my plan and I lose, I only have myself to blame. You need to have discipline in this industry, in this market, right? Boom. In dollar amounts, you're risking $20 to make $60. Not bad at all. Not bad. We can do better, though. All right, next line. Obviously, same scenario. Your take profit is 80 pips though. That's nice. That's very, very nice. Risk to reward is 1 to 4. That's very, very, very nice. In dollar amounts, you're risking $20 to make $80. Very, very nice. Very, very nice. We want that, right? We want a 1 to 3 at the least, at the minimum. Anything above that is what is that? Icing on the cake? Cherry on the cake? I'm pretty sure it's icing on the cake. Doesn't matter, right? The next line, right? 10-cent lot, 20 pips stop loss, 100 pip take profit, 1 to 5 risk to reward ratio. You're risking $20 to make $100. Doesn't that sound amazing? If you risk $20 to make $100 and you get one trade right, you have 4 more chances. You've given yourself 4 more lifelines in the market before you blow your account. Not necessarily with this account balance, but you know what I'm saying? But so that's sweet, right? Like I said, we want to aim for anything above a 1 to 3, at or above a 1 to 3 risk to reward ratio. We see in terms of stop loss and take profit pippage. I don't even know if that's a word, but in terms of those things, we see how much we're going to make versus how much we're going to lose. Now this calculation in my at the present time, like how I trade, this is all done in my head in a matter of like 2 minutes, not even 2 minutes, like 2 seconds. Like I can understand and say, okay, my stop loss is going to be 30 pips. I can take it to this next high or this next low or this structure or this support line. How many pips is it? Oh, 45 pips? I'm not going to get in that trade. I'm not going to risk 30 pips to make 45 pips, right? I don't even have to break it down. It's just like, you know what I'm saying? It's just like mathing your head. It's very simple, very easy to do. This is nothing but maths. Maths. You know what I mean? Maths. Very simple maths. But yeah, that's what it is. Now, let me break it down even more for those who may have not followed along over there. If you don't know what a stop loss is, if you don't know what a lot size is, if you don't know what a take profit is, which you should because I just explained it over and over again. If you don't know what a risk to reward ratio is, please close your laptop. Please shut off your TV and go to school. But I'll break it down even more, okay? To help you understand. This is very simple, very, very simple, right? Trades taken per week, we're going to hypothetically say it's 10. Number one, we're sticking with the $1,000 account lot size. From the last example, we're going to stick with the 2% risk per trade, right? We're going to stick to that risk management, right? And we are going to go with the 1 to 5 risk to reward ratio on every single trade we make, right? So if we have 10 trades per week, using those 3 things, those 3 inputs, right? And we lose 5 of those 10 trades. We lose half of those trades. In dollar amount, we've only lost $100, right? On the other side of that, we won 5 of those trades, and in dollar amount, we brought in $500. So for the week, the ending balance for your account, right? You've increased your account balance by $400, right? Amazing. Amazing. You've only won half of your trades. Amazing, right? Boom, boom, boom. And that's a 40% account increase. 40% in a week. Amazing, amazing. Anyways, let's go. Next line, right? We've taken, again, 10 trades. We've lost 7 out of the trades. So you lost 70% of your trades for that week. You only lost $140. That's not bad. It's 14%. That's actually is bad, but in terms of percentage wise, but we didn't get to the next line, right? We won 3 trades, so we brought in $300. In reality, we're up 16% for the week, so it's not bad. It's not bad. It's not too shabby. Okay. Next line. Let's say we lost even more. We lost 80% of the trades we took for the week. 80%. Look at me. Again. 80%. At this point, like literally, you need to subscribe. Like you need to sponsor my videos at that point. I'm not playing. 80% of your trades, you're losing? Bro. Anyways, you lost 80% of the trades. You've only lost $160, right? You only won 20% of the trades. You brought in $200. For the week, you are still up 4%. Not bad at all. I mean, it's not good, but it's not bad. 4% for the month, 5% and above for the month is very good for a trader. So I guess in a week that's fine. But that is to put the power of risk to reward ratio in perspective for you guys. And if you guys were listening, this whole part of the equation is risk management, right? Then the remaining part of the equation is risk to reward, okay? Put that in a different color for you guys. Alright? It's two pieces together, right? Risk management and risk to reward ratio. Putting those two disciplines together will make you a consistent trader. Like, look at the hypothetical. It will make you only have to win 2, given you take the same, type of risk to reward ratio trades every single time. You only have to win 2. 2. You can't win 2. You know what I mean? But, that is the information I have for you for this video. But you know what? I'm going to do something more. I'm going to give you guys more gems. I'm going to tell you what I'm waiting for in terms of this market, GBP USD, right? I see, and we can go on the weekly time frame. I'm not sure if I did a top-down analysis yet, but if not, I will do that soon. Probably not this next video because I have an idea of what I want to do for this next video. But in terms of what I'm looking at, right? I'm looking at it at an impulsive move up, right? Impulsive move up for a couple weeks now. Tells me that the market is bullish, right? Again, we have an impulsive move up, right? Right now, the market is floating. It's floating right now. And if we go from sometime last week, in the last video, I wanted to see this push to the downside happen. And it did happen, but it stopped. It stopped right here at this support level that I have highlighted, which tells me that that's a really strong support level, right? Boom, stopped. And it's kind of like bouncing all up and down that, right? This tells me, if we go back to the daily, we have 1, 2, 3, 4, 5 wicks on this one level. This tells me that this is a very strong support level. But if price can go ahead, if price can manage to break below the support level, what I'm going to do is I'm going to look for it. I'm going to monitor price action at the retest. And if the market provides to me a valid entry, a valid reversal pattern, something, I will get into the trade and take it down here to this last structure. And this is going to be right here. This tool that TradingView provides is a risk to reward ratio tool. It does all the calculation for you. This is going to be my trade, right? 1 to 8, or if you round up 1 to 9. You know what I'm saying? This is the type of trades that I look for. And right now, all I have to do is wait. All I really have to do is just wait, right? All I have to do is wait. I might I might go ahead because this is looking like it's making a descending triangle pattern. So I might just wait and see if I can get in, you know what I'm saying, somewhere along this trend line, and hopefully it holds. But that's what I'm waiting for. Whether that's going to happen this week or next week is up to the market. That's just my trading plan, okay? If I lose this trade, you know what I'm saying, this is about 20, 30 pip stop. If I lose this trade, that is fine. I'm not going to come down on myself because this is in my trading plan, and that is a great segue to me introducing the next video. In the next video, I'm going to explain to you guys what a trading plan is, right? You have a goal, right? You want to be profitable in the Forex market. You need a strategy. You need a plan in order to do so. So I'm going to share with you guys my trading plan and the types of pairs that I trade, the times that I get into the market, and you know what I'm saying, explain why and all of this stuff. So you guys can use that as a template if you want to. If you don't, it's fine. I really don't care. But this is just to help you guys use that as a template to make your trading plan and develop the discipline to stick to that trading plan. Because if you diverge from that plan and you lose and you blow your account continuously, you have no one to blame but yourself, okay? So that's what we're going to be going over in the next video. And guys, if you like this video, if you like the content in this video, smash the like button, smash the subscribe button, blow up the comments, man. Blow up the I don't even know why I did that, but blow up the comments, and you know what I'm saying, I'll see you in the next video.